Hello, thank you for tuning in. You're watching the Property Guide in ET Now. I'm Faye D'Souza. This is the show on which you get all of the information that you need when buying a home or investing in real estate. Remember, if you have feedback about the show or you have questions you'd like to ask us, write to us on the email ID that's at the bottom of your screen. You can also reach me personally on Twitter. As always, it'll be my pleasure to hear from you. On the show this week, we'll discuss the central government's plan to amend the land acquisition bill and find out what markets it's likely to impact and what those changes might be. We'll talk about the developments in the NCR market. Are Noida and Gurgaon starting to tick back to life? If so, is it time for you to buy? Also answer questions you sent in about Bangalore and Chennai. Joining us in the studio today, Ashutosh Limai, Head of Research at JLL India, and Jayashree Kurup, Head of Content and Research at magicbricks.com. It's always wonderful to have research people in the studio. You know there's going to be a lot of information on the show. Let's talk about the land acquisition bill first. Now, this act was passed during the tenure of the UPA government when the BJP was in opposition. Now, it provides for compensation for farmland when it's being taken over for industrial projects. Now, voices from corporate India complain that the law made the process of acquiring land very difficult, and several states have openly come out against the bill, complaining that it hurt the process of acquiring land for infrastructure projects. The central government is now trying to amend this bill in Parliament, and we're going to try and find out what this means. Ashutosh, first of all, the government keeps talking about the fact that it is going to make land acquisition friendlier or development friendly. What does that mean? When you look at the bill right now, what are the likely changes you expect to see?
I think the amendments or changes we would like the government to do are in terms of the consent that one requires to acquire land under this bill. Right now it's 80% for a private project, 70% for a public-private partnership project. I think that's a significantly high percentage. To convince that percentage of owners, it's going to take a lot of time, and that's where the corporates were complaining that the holding cost goes significantly high. I think we need to look at bringing down that percent. I don't know whether 50% is correct or 60% is correct, but clearly 70 and 80% is too much. Also, there are certain components, for example, private universities or healthcare facilities like hospitals or hotels, which we definitely need, and we need them to be constructed a lot quicker than what we are constructing right now. And those are kept out of the purview of this act presently. And if we were to achieve the government's vision of smart cities, certainly private sector needs to contribute a lot. And I think we need to bring those asset classes into the act. That's the third amendment. Right now it says, the act says that if the land is acquired but not put to use as per the announced plans for 10 years, it needs to be returned to the original owners. 10 years is too long a period. I think we need to bring it down to, say, 5 years so that the project takes off on time, and indirectly it will definitely help because then the cost will remain in check. So these are the main amendments we would like to see.
All right, that's a list, a wish list really for the government right now when they're re-looking at that bill of things that we believe will do well. Jayashree, tell us this. One of the things that Ashutosh just mentioned is the definition of what qualifies as infrastructure here. Now, we've heard several demands from the real estate market from builders who say that if we're building entire townships, then we should be given infrastructure status as well. How likely is it that that will happen? Or, you know, if it does happen, what sort of an impact will it have on the market?
Faye, I don't think I can see in real estate becoming getting an infrastructure status very soon. Though this has been a standing demand, somewhere I think it's very early on in the cycle and the industry hasn't achieved the maturity it requires. That's the thinking in the government circles. However, I think you see, you can break it into its components, and I don't think it's the real estate development that will get an infrastructure status, but wherever there is infrastructure, they are trying to negotiate whether there is something possible on those lines. But it's way too early to say what is going to happen here because I don't see any clear thought process. But definitely giving the real estate industry an infrastructure status does not seem to be in the minds of those in power. That's the feeling I get right now.
Actually, also, you know, Jayashree, I want to understand this from you. If you're examining the possible changes like Ashutosh just told us that we might see happen in the bill, and the government is very determined, in spite of opposition, to make those changes right now, what sort of an impact do you think it will have, and which markets will it impact first?
The markets that I think will first be impacted are the, the suburban or peripheral markets of large cities where there is an organic growth happening already, and there is a lot of land that you need for that city to grow realistically, organically, the outer ring roads and so on. And when that happens, once there's an infrastructure corridor, you see a lot of land acquisition happening and organic development happening there. That is where I think this is going to impact right in the beginning.
All right, so the peripheries of our big cities. Ashutosh, interestingly enough, this is something that the government is pushing for its Make in India project, which means that when they do make changes, or the changes that they're making will be with manufacturing in the back of their minds as the final goal. Now, if we examine all of our markets, and Jayashree was telling us, where she expects the impact to be, but if we examine where the manufacturing impact is likely to be, do you expect it to be along the Delhi-Mumbai industrial corridor, or do you expect it to be in the peripheries of our existing cities, or complete greenfield projects, or smart cities along that stretch?
I think it will be applicable to all, and by that I mean that cities that have overgrown already, they require planned development. So the peripheral areas of those cities clearly will be the beneficiaries of this. Green or virgin projects, I think only those projects which have got a very clear-cut vision laid out and finances already earmarked for that. Projects like Delhi-Mumbai Industrial Corridor, DMIC, a clear winner, I think. So the entire corridor of about 1,500 odd kilometers long, you will have several urban centers which will be freshly designed or conceived based on the manufacturing activity that takes place.
So remember, if there are any updates about the land acquisition bill, you'll hear them on the show, and you'll hear this analysis on the show as well. Let's move on now to a closer look at the NCR market. Now, we know that the NCR has been completely stagnant for the last couple of years. In fact, new launches have come to nearly a grinding halt, and that's because sales have slipped drastically. And a lot of builders have decided, that they will not launch new projects until they manage to offload the stock or the inventory that they have at this point. What I'm going to do is bring in my colleague Avan to give us an update about the prices in the NCR market, and then we'll come back and talk about it.
Thanks for that, Faye. Well, recent reports suggest that the real estate market in the National Capital Region remains sluggish, with no increase in the average housing prices over the previous quarter, and that's a pretty similar story to what we've seen over the past 2 years. Only a handful of locations saw a marginal increase in prices, while many saw a drop in the prices compared to 2012. Dwarka Expressway, which saw continuous delays in projects due to various litigation issues, saw prices drop by 9% compared to 2012. The prices here currently range between 7,800 to 9,650 rupees a square foot. Yamuna Expressway has prices quoting at 2,650 to 3,350 rupees per square foot currently. This 6-lane stretch connecting Greater Noida and Agra saw prices drop by 6% over the last 2 years. Sona Road, which connects popular tourist destinations around the area thanks to the recent infrastructure initiative, saw prices increase by 11% over the last 2 years. The prices now stand anywhere between 7,600 to 9,900 rupees a square foot. Golf Course Road, which is one of the upmarket locations in Gurgaon, also saw an increase in prices, but it was just a mere 3% increase. Currently, the prices here range between 12,050 to 14,800 rupees per square foot. With that, it's back to you, Faye.
All right, Avan, thank you for that update. Jayashree, I'm going to bring you in here. You're on the ground in Noida right now. Tell us what you're hearing from investors or from end users. Are people still on the fence about buying property? Have the prices not come down enough to entice end users to come out and actually cut a check?
Faye, I think the investors are more or less out of the market. I don't see investors planning to buy in a hurry. The investors will wait for at least another 6 to 8 months before they start buying. But there is a lot of interest among end users, and I think end users are actively looking at properties and actually finding them too. What is holding them back is that they do know the governor of the RBI has promised that home loan interest rates are going to come down in the next quarter, and I think a lot of people are waiting to see whether that would impact them and take their decisions. But there's very active property search happening across the NCR. The DDA housing policy, where there was a large set of houses that were given out, there was huge demand for that. The affordable housing policy of Gurgaon, there is huge demand, and I still see that the maximum demand is for either the 40 lakh to about 60 lakh or 80 lakh properties, and there is a vast amount of stock that has come into the market. So the end users have more or less narrowed down what is the house they want to buy. They're just waiting for the policy to play out, especially the home loan interest rates.
Ashutosh, I just want to bring you back to what Jayashree was telling us in the DDA scheme. Now, the DDA housing scheme had about 25,000 flats up for grabs. They got 10 lakh applications, which means that there is demand from end users, from people who want to live in these homes. So what would be the trigger then that the NCR market needs for these people, for the demand to match the supply and for sales to actually begin happening again?
I think it's a complex situation. While DDA got that overwhelming response, and bound to be, because DDA doesn't come out with those many projects so often. Good locations and a reasonable pricing was the reason why it got such a good response. But having said that, I fear that the investors' contribution in NCR's market is still not going away the way we envisaged or imagined it would have gone away. The sales have improved marginally. In Noida, they have improved to a good extent, also in Gurgaon. But I think overall, for the good of NCR's real estate market, I think the end users now should not wait for the rates to come down, both property rates as well as the home loan interest rates. Because on a floating interest rate, you will anyway get that benefit whenever RBI announces.
Happen, yes.
It should, and it will, I think. So I think the end users now should take the plunge. They should buy. There is enough pressure on developers to get rid of the inventory. I don't think they will see themselves in such a superior position for a long time in future.
So Jayashree, if I'm an end user shopping in the NCR region, what neighborhood should I look at? You talked about Dwarka Expressway some time ago. Have all of those issues been ironed out? Or would you rather have us look at the Noida-Gurgaon region? What would you recommend?
There is a lot of ready stock across Noida, Greater Noida, and this is the stock that the end users are actively considering because there's no risk. The Gurgaon market, the Dwarka Expressway, even though we have been saying that the problems are coming to an end, it's not really completely come to an end. For those who are entering early on in the cycle in the Gurgaon market, the Sona, which is the Greater Gurgaon, has opened up, and a lot of developers have launched or soft launched projects there. These are some of the good developers, and you can actually expect to buy from them, Silver Glades, Ashiana, some of the developers who established themselves as steady, with steady delivery modules.
Jayashree telling you that if you want something with no risk at all, go into a market and look for an investor in distress. There's a lot of ready stock available across the NCR, and it will also allow you to negotiate. In fact, before we go into break, here is a list of projects that our experts recommend on locations that we just discussed.
If you're looking forward to invest in the National Capital Region, here are a few projects you can take a look at. Sunrise Green from Jaipura Group, Golf Village from Supertech, RG Luxury Homes from RG Group, Supertech Eco Villages in Greater Noida West, Luminaire from Mahindra Lightspace, Versalia from Ansal API, Aranya from Raheja Developers, Golf Link from Gold Souk Group, Central Park 3 at Sona Road, RG Pride from RG Group, NX1 from Sarvottam Group, and finally Regalia from Colors Housing.
All right, time for a short break. When we come back on the other side, we'll answer questions about Bangalore and Chennai. Don't go anywhere. Welcome back. You're watching the Property Guide in ET now. Thank you for staying with us. Our guests are still with us, and we're talking about buying property in Bangalore. To begin with, Prahlad has written in. He's planning to invest about 40 or 50 lakh rupees to purchase a 2 or a 3-bedroom home in Bangalore. He wants some good locations. So obviously he hasn't made up his mind, first of all, about location or even about what he wants to buy. For 50 lakh rupees, what would you recommend as a location?
I think Hosur Road as well as Whitefield will give him a lot of options, good projects by reputed developers. Also, these are the areas where, because of the IT industry, if he decides to rent it out the moment he takes possession, that's a very good chance of him actually starting with his rental income immediately after taking possession. And we have Purvankara, we have Provident, Shriram Properties, Kolte Patil. These are all good developers who are offering good products. So I think these two corridors, Whitefield and Hosur Road, for his budget, and if he is able to stretch the budget a little bit, then Bellali Road opens out for him as well. So there the prices are slightly higher, another 5 to 6 lakhs rupees if he can organize and comfortable with. Then along Bellari Road, the northern corridor will also give him a lot of good options.
But Jeshri, if he's looking at Bangalore in the 4,000 category and he wants to maybe look at something ready to occupy in these neighborhoods, is there anything in the second sale market according to the website that he might find?
Faye, I do find lots of properties available to him. If he looks at Sarjapur Road, there is a small amount of stock in the 950 to 1200 square feet range, and he should be able to get about 15 to 2300 square per month as rental income if in case he chooses to lease it out. There is a small amount of stock on Thani Sandra Road as well. There he would get about a 1100 to 1250 square feet apartment. Electronic City, Whitefield, like Ashutosh said, are available, and here 1200 square feet apartments are available in the secondary market.
Well, Amit Agarwal has written in, he's planning to invest in property with a budget of 50 to 70 lakh rupees in either Noida or Ghaziabad, looking for a delayed possession of 2017 or 2018. He shortlisted some projects. There's Grand City by the Pratik Group property and Clio County by the ABA Group. He wants to know which one is a better option, keeping in mind that he might be renting it out in the future. Please give me some options. Jeshri, what would you recommend he does?
Especially in terms of size, he'll get in Siddharth Vihar, which is the Pratik property. You're getting about 700 to about 1800 square feet. 3000 to 3600 per square foot is the rate. Pratik Group has been delivering on time. You have the Clio County, which is about, he can get a much larger size property, about 1600 to 3000 square feet, a larger property within his budget. This is sector 121. It's early on in the cycle, and he would be, this would take some development before it's ready for occupancy. So you're not going to get a rental return at this point of time.
All right, let's take another question. Venkatesh has written in, he wants to buy a 2-bedroom flat in Pune for investment with a budget of 40 to 45 lakh rupees. Please give me some good options that I can get maximum returns on. This is the interesting thing. More investors, fewer end users writing to us now. Ashutosh, out of Pune, and that, see, we have to realize that a lot of the neighborhoods in Pune have run up a fair amount already. So if he's looking for maximum returns, he needs to be able to take a certain amount of risk and bet on something that hasn't come up as much. What would you recommend he looks at?
Absolutely. I think you said it. The established areas are already beyond this particular budget, and also they will not give that kind of appreciation because the prices have grown too fast. And I would recommend him 2 locations, Wagholi along the northeast corridor, which is an extension of the Nagar Road market, where the property prices are still within his budget, and that's the natural progression of development to reach. So I think Wagholi, where you have projects like Majestic and Nyati Group's projects, good appreciation. Also the northwestern corridor, which is the Hinjawadi corridor, nothing available in Hinjawadi for his budget for sure.
That's for sure.
But it is the Kivale and beyond, which are kind of sandwiched between the Hinjawadi IT Park and the Pimpri-Chinchwad industrial belt. That is where he might get some projects, but again by local developers, national developers or the League A developers of Pune, the price will not be within his reach. So if he chooses northeast, then good developers, good project at Wagholi. If he chooses northwest, both equally good in terms of potential. He'll have to rely on the local developers. Not that local developers are not doing a good job, but in terms of reselling, branded developers command a premium.
All right, so if you have any more questions about buying property, feel free to write to us. Our email ID is at the bottom of your screen. When we come back, we'll talk about Chennai and Hyderabad. Don't go anywhere. Welcome back. You're watching the Property Guide in ET now. Thank you for staying with us. Our guests are still with us, and we're talking about buying property across the country. We have a question. Ishan has written in he wants to invest 1.5 crore rupees in Chennai. That's a handsome budget, preferably in an independent home with a long-term horizon. He's interested in the Shobha Merita property, the Z Ria property in the area between OMR and GST. He says, besides these two projects, an independent house on the ECR also interests him. That independent house on the ECR sounds good to all of us right now, Ishan. He wants to know which of these neighborhoods would make the most sense. What would you recommend?
My money would go to East Coast Road, ECR market. I think GST and Oragadam are emerging locations, and they are so big in terms of extent that we may see a lot of projects in that category, meaning that the exclusivity tag might not be applicable to those locations. ECR has been always as a sought after location, has got that scenic value, has got already who's who living there with their second homes or weekend homes, and his budget allows him to look at properties along ECR, and good projects right now are available. Prestige is doing a project with Silver Springs. You have Signature Villas by Mantris. You have Vura ISP's project of villas. So I think when you have that kind of budget, I would recommend to go with ECR as the location. Long-term potential, again, he is willing to wait for a long-term horizon as well. And I think chances are that once he buys it, he may not wish to sell it at all. ECR is that kind of location.
Sudeep Das has written in, he's looking to buy a 3-bedroom flat from the range of 40 to 45 lakh rupees. Which city would buy you that? Well, Hyderabad. Narsinghi, Kondapur, Gachibowli, Outer Ring Road in Hyderabad. Which of these is the best option? Jayashree, if you were to pick the one that would give him the best returns, which one would it be?
I would say Narsinghi. Narsinghi is early on in its cycle, and you're buying at not such high rates, and you would get better returns. But when I look at the website, within his budget, in all 3 areas, he has properties. So he really should look at the options and check it out on the ground before he makes his decision. Hyderabad is such an affordable market. I just love that market. There's so much potential there.
That is true. Hyderabad is a beautifully affordable market at this point. A 3-bedroom in the bracket of 40 to 45 lakh rupees. We should all be considering Hyderabad, but then that would drive up the prices. Let's take one more question. Well, Amitava has written in. He tells us he wants to buy property in and around Kolkata with a budget of 30 to 35 lakh rupees. This is purely as an investment. Please give me a good location and some good projects. Well, this is the interesting thing, Ashutosh. It's entirely an investor's show now, which is indicative that the market has turned around and more people are investing in property at this point. So if we're looking at Kolkata with that budget, what would you recommend?
Very clearly, I think the Rajarhat New Town area emerges as the top priority. I think that's the area which will see the maximum infrastructure development, maximum densification, a diversity of activities, particularly economic activities. So I think I would recommend him to invest in Rajarhat. There are good projects available there, Merlin Group's projects, Siddha Group's projects, and many more that he can look at. Having said that, there is another area which is now emerging, which is the southwest corridor of Calcutta. Few people have looked into it so far. It's called as Mahesh Tala, and I think along the Hooghly riverfront there are good projects coming in at a highly affordable rate, just about 3,000 rupees a square foot. It's a very inviting rate, and some projects are worth exploring there. Projects like Highland Greens, I would certainly recommend. So he should visit Mahesh Tala also. He might develop some liking to that, and it will be equally good as is Rajarhat.
All right, so there you have it, options on your screen for you. So if you're an end user, you're looking to buy a home, or you're an investor, you're always welcome to this show. Write in, send us your questions. It'll be our pleasure to answer them for you. Jayashree and Ashutosh, thank you so much for spending time with us this week and answering our questions. That's a wrap from me and the team at Property Guide. Thank you so much for watching.